Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 29th day of December, 2021. Wow, another year. Almost over. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you're tuning in on our YouTube channel right now, youtube.com/CFRN, there's a better way to join the show, and you only have to do this once. Go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. But more importantly, it will give you access to the question box so that you can ask questions and participate in the discussion. I'm not able to monitor the YouTube chat box while I'm broadcasting live, so if you just want to watch the show and you have no questions, by all means, 12 noon Eastern, every trading day, youtube.com/CFRN. Not only do we broadcast live each and every day, but we archive every daily show on our YouTube channel, and currently we have over 1,800 daily live broadcasts archived there for your educational and viewing pleasure. So with that, let's open with a word of prayer. John 10:10 says, I came that they may have life and have it more abundantly. Now, this is a prayer of hope, really, for when Christmas is over. You know how there's that huge buildup, all the planning and the scurrying and the hurrying and the wrapping, and like that it's over. It's kind of like Thanksgiving. Boy, you're cooking and doing stuff and shopping for days, and in 20 minutes, it's over. Kind of like sex, but we won't go into that because this is a family-friendly show. Often these days after Christmas can seem maybe not quite so sparkly. You might be feeling like the holiday spirit came and went by too fast. Maybe you never did get everything done. But now that the big day is gone, you're already vowing to make next year even more special. Messy house calling your name. Organization of it all begging for attention. Returns waiting to be done. Toys already broken. Lights going out. Just stop and take a deep breath. His reminder to our hearts today, Christmas may be over, but He never changes. Though some days seem to have lost their shine, He's still the same. Wonderful Counselor, Mighty God, Everlasting Father, Prince of Peace. On all the big celebration days and on all the days in between. The manger is empty, and so is the tomb. Jesus didn't stay there. He's alive today. Our Emmanuel, God with us. Whatever you might be facing, don't ever doubt His great love for you. He sees you and He cares for you. He made a way for us to be free. And that truth puts all the joy and merry in Christmas and the New Year too. We still have such reason to celebrate. We still have great reason for joy today and every day. For He is with us. Resting there today. I hope you are too. May His peace and joy fill your heart and home today more than ever before. With Christmas behind us, the New Year ahead of us. Let's pray. Heavenly Father, fill us with your joy and the peace of your Spirit. Thank you for your reminder that both in seasons of celebration and in seasons of brokenness, you're still with us. You never leave us. Thank you for your daily presence in our lives, that we can be assured your heart is towards us. Your eyes are over us, and your ears are open to hear our prayers. Thank you that you surround us with favor as with a shield, and we are safe in your care. We choose to consciously press in close to you in all these days after Christmas. Thank you for giving us this hope we can carry all year long. In Jesus' name we pray. Amen. And amen. Okay, Michael's running a little bit behind. He had to drop off Jake's car. Boy, that car. He's back, okay. He's had some issues with the car, but he's back. So let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, the indices as they're called. And then we'll go to Michael and get a recap of what happened in the live training room. Let me refresh my data. Here we go. The Dow's currently up 59 points. The NASDAQ is down 58 points. The S&P 500 is down 2.5 points. And the Russell 2000 is up 1.25 point. This is a textbook definition of sideways consolidation holiday trade. I wish I could tell you it was going to get better today or tomorrow, but I don't have crystal balls, so I can't do that. It's just typical this time of the year. In the commodity basket, crude oil down 27 cents, trading 75.71 last. Gold down $7.60, trading 1803.30 last. Silver down 30 cents. That's a little over 1.25%, trading 22.82 last. In the Asian markets at the close, Nikkei posted a loss of 162 points. Shanghai fell 33. Hang Seng down 194. And in the European markets at the close, FTSE up 48, DAX down 111, and the CAC down 20. Not a mover or a shaker in the whole bunch. It was a red day in Asia, a mixed day in the UK, and so far it is a mixed Radio Wednesday here in the US of A. We've got the Dow in the green, the Russell in the green by 1 point. We got the NASDAQ in the red, and we got the S&P in the red, but only by 2 points. So again, just some very quiet sideways consolidation into the new year. With that, Michael, feel free to take it away.
All right.
He'll give us a recap of what happened in the live training room. He'll, I'm sure, share with us the latest adventure in the story of Jake's car.
Yeah. Hopefully, that adventure will be resolved by the end of the day today.
Awesome.
Is what I'm hoping, and then we'll have a nice normal week for the rest of the week.
All right, guys. When Michael's done, I'll be back, and we'll take a look at the logic alerts, the concierge trade alerts. Not a lot of whoop-de-doo today because of the sideways consolidation, but we'll go through everything just like we always do. Michael, I can see your screens. It's all yours.
All right, here we go. Good afternoon, everyone. Today is Wednesday, the 29th day of December, 2021. Guys. All right, so if you've not taken a free trial with us and you want to, go here to eminitrainingschool.com. On this page, all that we ask for is your first name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button. You'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click the link, then we don't know that you took the free trial, so you got to click on that confirmation link, okay? All right, spreadsheet. Here we go. We have 1 day left this year in the spreadsheet. Today, as I said, well, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. You know, I have to say that. I have to say that for all you guys who are here. That is a requirement. Okay, so that said, today is the 29th day of December, 2021. Today we made 27 ticks in crude and 30 ticks in gold, and we ended up break even on the ES. So not a big week so far on the ES. We had -4, +7, and break even. Look at that day right there was bigger than like the last 2 weeks combined. Well, it was part of the last 2 weeks, but anyway. So we're +570 on the morning session, okay? And today it took 65 minutes and 9 trades to get to the goal for the day. At that point, we're $105 a contract, and we took a total of 22 trades. So on the month now, we're at $13,517 a contract. That's over 20 trading days, averaging $675 per contract per 2-hour trading day. On the year, we've gotten our goal for the day on 246 out of 249 possible days. Now, there were a few more than 249 business days this year, but this year I had to take, because things came up, I had to take like 3 days, I think, where I couldn't do the room at all in the morning. We are at 145,592. That's above what I thought was achievable and halfway to what I thought would be a stretch. So I'm good with that. If we ended it above 145,000, you got to set goals that are achievable and goals that are just a little beyond your reach. Keep you reaching. All right. So that's over 249 days, averaging $584 per contract per 2-hour day. On the year, if you quit when you follow the 24/20 blueprint with a little caveat that you only add 1 contract per month as opposed to adding 1 every $2,000, we would have only worked 65.73 hours getting the goal this year, okay? And average $3,054 per contract. That's adding 1 contract per month after I get the goal, right? That's like just a regular long week's work, well, when you're in career building mode. All right, so let's get into the actual markets. Okay, now the majority of the trades today came on gold, and crude and the ES were about the same. So I'll just start over here with the ES. Now I want to look at the big picture on the ES. This is what I was looking at yesterday. And yesterday I was looking at it over here. Let me back it out a little. This is where we were yesterday. And I was hoping when I was talking about this yesterday that we were going to get a close above the MA1 and the BBC right in here. Now we didn't get that, and we failed. And you see I drew in these orange lines right here and right here. This is where the sellers are, and this is where the buyers are. And that is proven to be the case again and again and again. Well, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, and this one will be 15 times. Now, this is the triangle that it needed to close outside of as we ended the last session for the morning, the last half-hour bar for the morning, and it closed down below that triangle. Okay, so that suggested it was going to go down, and down it went. And so right here we are again at that spot where there's a bunch of buyers, and we got to see if it's going to push it back up. You know, we closed up above the BBC yesterday right here, but that was a bearish candle closing above the BBC. It wasn't a bullish candle. The very next candle went all the way down here yesterday. Okay, and you see right down here, looking left, buyers, buyers, and a lot of buyers right here to send it all the way back up here, and all the way back up there happens to be right up above the BBC over here. And what did you find there? More buyers all the way up to here. So it's anybody's guess. You know, tomorrow is the last day we have for this, but trade what's in front of you. That's been my motto for years. All right, so here we go. Our first trade of the day on the ES was a stop out. We were minus 8 ticks. All right, I missed a trade right there. Now it went into profit, but it would have been a break even for me, like the next one was. That was a break even. Then on this one, we went from minus 8 to minus 6. Finally picked up 2 ticks here. We had a break even, a mistrade, another mistrade. Yeah, this would have been a break even. This would have been a break even. Another break even, and here I picked up 6 ticks on this one. Now I drew this box in here. I drew this box not for this area where it is, but just to illustrate that inside this box is where it needs to get out of. It's been trading a lot inside that box in the last few days, and that box is where it really needs to get out of. And you see it's just pulling out of the bottom of it again right here. But if I put it back here, you can see I started talking about that back here. Well, you can't really see it anymore, but where I started talking about it was back there, and it's just coming out the bottom of it right now. All right, so right here, what we ended up with was break even on the morning session for the ES, and during the break here, it looks like there was one short right here, and one more right here. This wasn't even a short. Still not a short. Just one trade during the break. So it's slowly grinding downward right now. Okay, I'm going to go to crude oil. And on crude, we ended with plus 27. We stopped out on this last one to the tick right here. And it was hitting pretty good, the numbers that it was showing. But, you know, right in here was our first one. We were showing these numbers up here. It took forever. It eventually got up to them. But our first trade on crude was right here. We picked up 5 ticks on that. Right, then we had a break even. Then we picked up 10 there to put us at plus 15. And one more there to put us at plus 16. Then crude was moving in here, but it just wasn't giving the trade setup. So it was one here that I missed that would have been nice and profitable. One here that was a break even. This is all in the first hour or so. There was one more right here that I missed. And then I grabbed this one over here, which was a momentum short trade. I picked up 19 ticks on that to put me at plus 35. And then I stopped out on this one to put me back down to 27. Actually, it should have been 20. Yeah, 27. That's right. Then we get into the break. And here during the break, I know I had some numbers, but it looks like it hit all the numbers on the downside. I don't really know anything else that I looked at. Did have a little crisis with my son's car. Well, it wasn't really a crisis. I needed to get it to a mechanic, and so I had to leave right away. So I didn't look at anything during the break. It looks like there was a whole bunch of chop. A couple of trades triggered during the chop, and you know when it looks like it's going to be, it's at a trend change point, and you get the highest probability trade setup. The highest probability trade setup is really the only one you want to take when it's at that trend change point where you're not sure if it's a new trend or not. Like right in here where it's kind of garbage, but you had a little bit of a trend right here and right here, but you could have drawn a trend line down. The only trade you want to take when it's like that is going to be the highest probability trade. That'd be a bounce off the BBC where the MA1 is the right color and the cycle is the right color, and you have good separation. Okay, that's the only trade you want to take. And so that was crude oil. All right, and we ended with plus 27 on crude after that last stop out. And gold. Now, I did want to look at the larger picture on all of these too. Now, yesterday, I was talking about gold and where it should go. And it went where I thought it was going to go yesterday, and then a whole bunch more. Okay, today is the 29th, so yesterday was the 28th. Right, 28th, 27th. Here it was right in here. So yesterday I was saying we want to see it pull back up, test the MA1, and then fail. And down here is where I thought it was going to go, and it went way through that. And it went all the way down here. Now on the 30-minute chart, I drew this trend line this morning, but you can see it never even got close to a challenge. And this is going up, which means the equity should start dropping. Now the cryptos they're not really getting killed today like they were yesterday, but you know, the money's got to be going somewhere. And yesterday it was going into equities. Today it's coming out of equities and going into gold, it looks like. All right, but if we go to the 4-tick range, our first trade here on crude, we had a break even. Crude gold. I mean gold. The next trade we had +4. The trade after that we missed. Then we got another +4 to put us at 8. Then we missed another one there. We picked up 10 to put us at +18. Then we picked up 3 to put us at 21. Then it looks like 8 to get us to 29, 1 to get us to 30, and then we had a break even. And we went from 30 right in here. We picked up, I think we picked up another 10 there that I didn't count. Was that 1.3? Yeah, I think we picked up another 10 there. Might have been 11 that I didn't count. And then we had a break even over here. We ended up with +30. Nope, we had another break even right here. During the break, there was nothing. Nothing at all during the break. But let me show you a couple of instances of that whole trend change thing and making sure you have the highest probability trade. Okay. I'm trying to find one from today. Like right here. This was a pretty good looking trend change area. You had lower highs and lower lows pretty clear, but right here you hit the BBC. Well, this wasn't the highest probability trade because the cycle would have changed color, but this had a pretty good trend going for it. But let me scroll back just a little bit more, and I'll find one that you might have questioned. Like right here, you might have said, well, I could draw a trend line that way, or I could draw one that way, but you hit the BBC right here. The MA1 is the right color, the cycle is the right color, and you have the separation. So this is an okay trade to take. Remember, you're only trying to get the equivalent of $100 a contract. Okay, here's another one right here. Hit the BBC after the cross and the pull away, pulled back up, hit the BBC. Now, this is looking okay for a trade set up here, you know, like a downtrend. This doesn't really have a whole lot going for it. You could say that this was your trend line here that you wanted to break and not this one. But you did hit the BBC. The MA1 stayed the right color. The cycle stayed the right color, and you had the separation. You know, let's see if we can find another one like that. I'm looking for one where the cycle actually stayed the right color too. Well, anyway, you get the picture. Right, we've gone back a couple of days there. And with the chop that we've had recently, that's kind of tough. But so we ended with +30 on the gold. Okay. Now let me bring up this and click on that. You're checking, and it looks like the markets are open for a full day tomorrow, I think, right? Is that what you're asking about? Full day of the 31st. We're not going to be doing anything on the 31st. Are they? That's not what we went through this morning. I know the markets are closed on, well, the banks are closed on Monday. Okay. Well, we talked about this morning, and I thought the decision was, because Bert was even in on it, and the decision was we weren't going to do anything on Friday. Yeah, well, some of them might be, but either way, I thought that was the plan. We weren't going to be here Friday, and I know. Oh, well, it's New Year's Eve is Friday, and I know the banks are closed on Monday, but the markets are going to open up Sunday night. So I don't know. The way it came together is just kind of weird. That's what we were talking about this morning. And so I was thinking, Val said she thought Friday that the markets were shut down. But, well, anyway, let me get through the spreadsheet here, and we'll figure it out. By tomorrow, we'll have a good answer. Today, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 29th day of December 2021. We made 27 ticks in crude, 30 ticks in gold, and nothing on the ES. That puts us at plus 570 on the morning session. Today it took 65 minutes and 9 trades to get to the goal for the day. At that point, I was up $105 a contract, and it took a total of 22 trades this morning. Right, so it took 9 trades to get it. On the month now, that puts us at $13,517. How does that fall on the year? That is like the 4th best. Best, 2nd best, 3rd best, 4th best. Yeah. Okay, so that's not too bad. Ending the year that way. We've gotten our goal for the day on 246 out of 249 days. Puts us at $145,592 for 249 trading days, averaging $584 per contract per 2-hour trading day. Now on the year, if you were to follow the 2420 blueprint and quit after you got your goal for the day and add 1 contract per month, you would have worked a total of 65.73 hours getting your goal for the day this year. And you would have averaged $3,054 per hour by the end of the year, adding 1 contract per month. Okay. Now, if you've not taken a free trial, go to eminitrainingschool.com. All we ask for is your first name, your email, and your phone number. You can tell us a big straight challenge so we can tailor one-on-one training just for you. Hit that send button, and then you will be sent a confirmation link. You must click on that link. Okay. If you don't click the link, we don't know you took a free trial. So click on that link. All right. There you go. With that, we can pass it back out to fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park. Dwayne, if you're ready.
Should be able to see. Okay, sorry, YouTubers. I've got the YouTube mic open now as well. And the message that I put in says, U.S. markets will be closed on Christmas Eve this Friday because the Christmas Day holiday falls on a Saturday. But equity markets will be open on December 31st, which is New Year's Eve, and operators of the New York Stock Exchange aren't designating January 3rd, the first Monday in 2022, as New Year's Eve observed. So, let me click the link that I got that from.
Yeah, because even that's ambiguous.
No, it just says the markets will be open all day Friday. Blame it on an obscure rule, but for the first time in a decade, there will be no stock market closure in observance of New Year's Day. U.S. markets will be closed on Christmas Eve because Christmas holiday falls on a Saturday, but the equity markets will be open on December 31st, which is New Year's Eve, and operators of the New York Stock Exchange aren't designating January 3rd, the first Monday in 2022, as New Year's Eve observable. The last time this sort of calendar event transpired was on New Year's Eve in 2010. How rare is this calendar event? Assuming that it was applied since 1928, it would have occurred 13 times from 1928. So what I'll do, guys, is the page that I'm getting this info from? I'll just stick the link in the question box, send it to everybody, and then I will take control of the screens.
Okay.
And we're ready to rock and roll. So again, if you got plans and you and Valerie got things you want to do, take the day off, by all means do it. You certainly deserve it. And
Okay.
then I'll make a decision what I'm going to do. Probably because I have to stay busy or I get in trouble. So I'll probably do something on Friday.
Okay.
So anyway, we can talk more about it later, tomorrow, whatever the case may be. Recap of the recap.
Today it took 65 minutes and 9 trades to get to $105 contract.
Good job.
Thank you.
Okay. Now that's what happened this morning. The first 2 hours Wall Street was open. Here's what's happened the entire week since the Globex markets opened Sunday night at 6 p.m. Eastern, and they remain open around the clock until Friday afternoon at 5 p.m. Eastern, except for the 1 hour daily break. Like today is the Wednesday session, and it will be the Wednesday session until 5 p.m. Eastern. The markets will close for an hour, and then tonight at 6 p.m. Eastern, the markets will reopen, and that begins the Thursday session right up until 5 p.m. tomorrow afternoon. Once we open the Logic 247 alert channel on Sunday night, it stays open around the clock. Alerts can come out at 2 a.m. or 2 p.m. Whenever opportunity presents itself. We have traders around the globe, so our day session is their night session, and we got to make sure we take care of everybody. Since Sunday night at 6 p.m. Eastern, we've issued a total of 63 alerts. 6 never triggered. We're still waiting on the outcome of 6. We've had 51 actionable alerts, of which 5 or 10% would have been stopped out based on not risking more than $300 per contract, per trade, less when possible, based on market structure, and a very simple 3-step process that we teach all of our traders. Now, a typical week over the last 178 weeks, 20% of the alerts do get stopped out. Markets have been kind these last few weeks. I think we had an 8% week, a 12% week. We're at 10% this week. But over 178 weeks, the average has been 20% of the Logic 247 alerts do get stopped out based on that risk profile. Now, we only record the first trigger on the Logic alerts. But just like on the CTAs, as you know, once the CTA triggers, there's a high probability it's going to trigger again and again and maybe even again. The same is true of the Logic alerts, but it's just impossible to keep up with every single trigger. So if the first trigger is a stop out, red X, okay? If it makes it to the target, we get a thumbs up. It's pretty simple. And if you see those little Z's, then that means it just never triggered. Now, my computer took a hiccup last night. So going through the charts is going to be a little more difficult today than normal. So I really do encourage you to take a screenshot of these CTA numbers, because when my platform crashed, my little bars that say long CTA, short TCTA, some I found, some are missing in action. So, you know, I'm going to have to be making some adjustments as we go through each of the markets. So this way you know exactly what the number was as it was published last night at 6:15 p.m. Eastern. Now, logic alerts come out around the clock, but the CTAs are posted as a static report shortly after the Globex open, and then the numbers are good for the entire session. And again, once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. So with all that said, let's get to the daily chart of the S&P 500 Emini futures. And I got to drag it up to the big screen because I was doing some work. Now, for those of you that tuned in early for the praise and worship videos, those are some throwbacks to the 90s. I've been playing a lot of modern worship videos over these last few weeks, but I dug into the annals of history, and I know I told you the story just recently. It was 1996 when I discovered a radio station called K-Love, and I was absolutely blown away that there was this incredibly good music that was faith-based. I'd been told all my life, you know, the devil owned all the good music, and boy, that's just not true. I grew up in a Pentecostal holiness church, singing out of the hymnal. Turn to page 275, Rock of Ages. Turn to page 152, Just As I Am. Those are the songs I grew up with, and I thought that was the extent of what Christian music had to offer. Boy, was I in for a surprise. And then out of K-Love was spawned Air One. Air One's a little more rockish, a little more edgy. K-Love's a little more middle of the road, but it's all contemporary Christian music. And that might not be your gig. You might prefer the older stuff, and there's absolutely nothing wrong with that either. It's just good to know that there's something for everybody. Now, we got to take this fib and go up here and embrace the new all-time historic high, because Dwayne, once again, after putting all his zones on early this week, and even telling you the importance of saving, let me just show you. You guys on DT Pro, this is how simple it is. You go to File, go to Workspaces, go to Save As, and you'll get this little pop-up. And as you can see, I've already saved today after I fixed most everything. So now I'll go 12, 29, 21, B. Now if my computer were to crash right now, I could open it back up and I could restore everything exactly the way it was. So I highly encourage you to do that every trading day. Okay? Just takes a second. Can save you hours of work. All right, all-time historic intraday high yesterday. Okay, this is the Wednesday candle. Here's the Tuesday doji. Okay, now that doji, after this climb, that's very meaningful. Okay, if it were a bigger doji, it would be even more meaningful. But dojis are only important when they're viewed in the proper context. In other words, if price is trading sideways and you get a doji, it's just a continuation signal. But after you've had a nice strong rally and get a doji, especially on a daily chart, remember, institutions, deep pockets, hedge fund managers, they're watching daily, weekly, monthly charts the way you and I watch 30-minute, 5-minute tick charts, range charts, etc. So here's Wednesday. We're getting a red candle. Tuesday we had the doji, the new all-time high. It's really important that we got the doji at the new all-time historic intraday high, because prior to that we had 1, 2, 3, 4 big bullish green days in a row. We don't use terms like overbought, oversold. If we did, we could literally say that this entire year the S&P 500 has been quote-unquote overbought, depending upon which indicator or lens you use to view that through. And markets can stay overbought or oversold for a very long time, so that's just why we stay away from those words. Now, from this new all-time historic high, the 24% Fibonacci retracement, now we're talking the last leg up, which is from this low put in on December 3rd to this high put in on December 28th. The 24% Fib retracement is at 47.23. The 38% Fib retracement is at 46.78, which lines right up with the daily BVC. Then we got the 50% Fib retracement down at 46.41. And then we got the 62% Fib retracement down at 46.05. Price pulling back to the BBC. We expect the pullback to hold. The pullback holds more often than it doesn't. Now, this here is really unusual compared to what we've seen on the daily chart for the bigger part of the year. If I scroll back a little bit, in fact, let me do this for a minute. Let me go at ES, use the continuous chart, okay, which blends all of the various contracts together so you can get more data. From May through September, look at that climb. This period right here was the longest amount of time we spent below the BBC all year. Pullback held, the pullback held, the pullback held. This pullback, you know, we had one day where we weren't touching the BBC, but then we were right back above it. So a little bit of choppiness. We did get a bearish cross, but then we got a bullish cross. And from May through, what was it, September? Yeah, we stayed above the BBC. We didn't get back below the BBC until September 10th. And if I scroll back even further, I mean, we're back into last year now, okay, 2020. This climb started, in fact, this climb started November. And from November, we stayed above the BBC. We dipped below it in January, and then we rallied. And then we dipped below it a little bit in February. And then in March, the bulls came out in full force and kept us above the daily BBC for most of the year. No matter what market or time frame, the pullback to the BBC holds more often than it doesn't. The larger the time frame, the more likely that it's going to hold. So if price does come down through the daily step line, the 24% retracement, and blue and climbing, each one of these three are potential support. But if price gets all the way down to the daily BBC, we expect that to give us a very nice bounce. The 24 could give us a nice bounce. The step line, the blue and climbing. It's called CFMA1. I refer to it as blue and climbing, red and falling. One is bullish, the other bearish. The green line, BBC, just stands for bull bear cross. When price crosses below that green line, we're bearish. In other words, we're looking for lower prices, whatever market, whatever time frame. Once price gets back above the BBC, now we're bullish, looking for higher prices. Below, lower prices, above, higher prices. And again, everything we teach, our methodology, our strategy, our indicators, are fluid across not only all markets, all time frames in the futures market, but also in stocks, Forex, crypto. If it's an auction style market with buyers on the bid and sellers on the ask and price channeling back and forth all day long, you'll find that our methodology and our strategy holds true. And that's a big statement to make. but I make it in good conscience because I know it is true and factual, and we have the data to back it up. So I always encourage you to start your trading day. Let's get back to the current contract, SH22. Whatever market you trade, I encourage you when you sit down for your trading session to at least look at the daily chart and identify where the major areas of resistance, high of the day, support, low of the day. Now yesterday's low was 47.70 half. Today's low is 47.70. So we've taken out yesterday's low by all of a half a point. But after this rally and this daily doji at an all-time historic high, I think we got some downside coming our way. Okay, we've got 2 more trading days left in the year. I will, whether I do a show Friday or not, or do a room Friday morning, I will be putting out alerts. I will be putting out both logic and concierge because the markets will be flowing. And I know some of you, because you have time off from your day jobs, some of you will, want to be able to take advantage of those opportunities that exist. Even though it'll probably be very quiet, sideways holiday trade, it's a good time to practice, okay? Now, I have seen holidays where the major players know that the markets are thin, and where they might normally have to buy 10,000 S&P contracts to move the market, they can do it with 1,000, even 500, even 100, okay? So, speaking of that, if you've never listened to the interviews we did with Michael X quite a number of years ago, if you Google CFRN, Michael X interviews, there's 2 or 3 of them. He's a humble guy. He has a seat on the exchange. He didn't come on the show, pounding his chest about how awesome he is. But this guy trades, and this is verified. This guy trades on an average 10,000 E-mini contracts a day. Not all at once. He is in and out, in and out, in and out. And I asked him in one of the interviews, what's a guy like you consider a good day in the market? And I was expecting a dollar figure. Any day I make 50 grand or any day I make 100 grand. His answer was, any day I take 2 points out of the S&P, I'm a happy camper. I bet you are trading that many contracts. But it really made my jaw drop because Michael and I have been preaching this 2 points a day thing for a very long time. And then to have someone who trades in that kind of size, an institution unto himself, to say those words, a good day in the markets for me is when I take 2 points out of the S&P. That just confirmed everything we've been teaching, everything we've been preaching for quite some time. So if you have time over the holidays, Google up those interviews, listen to him. Again, he's not prideful, he's not boastful. I literally had to drag the answers out of him. He's just that kind of guy. So, all right. Not much happening, so let's just go ahead and get this done. On the S&P, this vertical line separates today, Wednesday, from yesterday, Tuesday. Now, while we've had some logic alerts trigger, the concierge trade alert was to be long 4,800 or short 47.65. Neither one of them triggered. Sideways consolidation. And this may be just exactly what we see tomorrow and Friday as well. Okay. On the Dow, make sure my numbers are right. Okay, yep. No trigger on the long side, no trigger on the short side. This is where we opened last night. We dipped below the BBC, got back above it, dipped below it again, got back above it. Is it possible the market could rally, during into the afternoon, into the close? Absolutely. You have to always embrace all possibilities and never discount a quiet market, because those institutions, they can come out of nowhere with a big order that has the ability to move the market. Okay? And then all the retail traders chase it. We don't chase trades. We teach you how to spot high probability, low risk trade opportunities, so you're not dependent upon any outside influence. You just simply trade what's in front of you, because our market, our methodology and strategy is itself based upon the underlying principles of which the markets operate. Price flows on a 1-minute crude chart the same way it does on a monthly S&P chart, or a 30-minute stock chart, or a daily stock chart, or any time frame in Forex, or any time frame in crypto. It's this simple, okay? Now, some people are going to go, oh, that's just too simple. Well, but it's true. Price flows from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Once you understand that, then you begin to hear the rhythm of the market. Okay, you can feel the rhythm of the market. You see it on your screen, you feel it in your bones, and it becomes logical as to what's going to happen next. We're not fortune tellers. We don't read tea leaves. We don't know what's going to happen next with certainty. Nobody does. I don't care how many lies they tell you. They're lying because they don't. When God created Adam, he didn't give him the ability to change the past or to know the future. And those two things are inextricably linked for eternity. Now, since we can't know with certainty what's going to happen next, using our indicators, our strategy, we can know what the next high probability move is simply by looking at a chart. Okay? And once you've been with us a couple weeks, if you've booked a couple mentoring sessions with me one-on-one or with Michael, attended class in the morning, you should be able to do the same. Okay? The next high probability move from here, we're above the BBC. We've got blue and climbing. We've overcome the step line. We've overcome these swing highs. And so the next logical thing for the market to do is to overcome that swing high, and then it's going to make a run at that swing high. That gives you a tradable window of opportunity from basically 36,370 to 36,390. 20 points, $5 a point, $100 per contract traded. We'll come back and check on that in a minute. On the ES, the window of opportunity on the ES, now the markets are mixed. We like it when all four major indices are on the same side of the street. We don't care if it's the red side of the street or the green side of the street. We just like them to all four be in agreement. That gives you your best trading opportunities. Right there is a beauty. Okay, that would be below that low. That would be below that low. See, we got a swing low. Now we got a lower low. Now price is running up to the BBC, but we expect that to be good resistance because we're approaching it from below. Just like here, the pull up held, and it held, it held, it held, it held. And if we run up there again, we anticipate it will hold until proven otherwise. Okay? Just like over here, price was pulling up to the BBC. It consolidated for a few hours. Then it finally closed above it. Then we had a candle open and close above the BBC. So now that's our key. That's our signal to start looking for trades on the long side. Okay. This candle opened and closed below the BBC. Going to go look for some short trades. Okay. And then here's the 9:30 Wall Street Open, which most of you know. I don't put out alerts. I don't put on trades during that 30-minute period. Michael and Valerie both do. They hit the ground running at the opening bell. I just prefer to wait for the initial volatility to calm down, the 10 a.m. news to come out. We had news this morning. I think it was new home sales. Huge miss. They were looking for some positive number and ended up with a negative number. I don't know if I have that tab open on my browser. I don't see it. But anyway, the big news at 10 a.m., high impact news, was much worse than expected. Could that be signs that the real estate market is cooling? Have prices gotten too high for people to afford them? There's a reason behind it. I'm not an economist, so I'm not going to guess. I'm just going to trade what's in front of me. Price could stop at this resistance here, at the step line in red and falling. Okay, if that be the case, I want to see price come down, take out this low, take out this low, and then there's a nice window of opportunity from 47.69 down to 47.66. That's 3 points before you even get to the CTA trigger. And if we come through that CTA trigger, the final trade to target is down here. On every short alert, the final trade to target is the weekly zone below. On every long alert, the final trade to target is the weekly zone above. We've published the zone since December 14th of 2009. We have over a decade of data that tells us clearly how price behaves at weekly trading zones. Only 3 things happen at a zone. The most likely is consolidation. Second most likely, rejection. The third and least likely, the slice. If I come across some good examples, I'll point them out to you. Because we're just so flat, we haven't touched the zone above or the zone below the entire session. See price starting to creep into that window of opportunity we drew. Now, why did I stop the window there? Well, because the last time the market got up here, it was rejected. The last time it got up here, it was rejected. The time before, it was rejected. And the time before, it was rejected. These made it just a little bit further. So, we're above the BBC. We've got blue and climbing. Whether you go long or not, you certainly don't want to be short. Okay. All right, on to the Russell. Okay. Long side on the Russell never triggered. 2260. The short trigger, 2240, did trigger. Okay. Now, remember the final trade to target on every alert. On a short, it's the zone below. On a long, it's the zone above. But we triggered on the short side. Now, this is what consolidation looks like. That's the most likely thing to happen at a weekly zone. Consolidation. That's about 70-75% of the time. Rejection is when a 30-minute candle comes down, touches the zone, but by the time the 30-minute candle closes, see, this was a big red candle. It came all the way down. It spiked the zone, but before the 30-minute period was up, price had made it all the way up here. All that was left touching the zone was the wick. That's rejection. Price got rejected. Now, a slice is this. Price slices through a zone like it's not even there. And then typically what will happen is when the slice runs out of steam, price will retrace back up to the zone it sliced through. We didn't quite get all the way back to the zone. And then price will continue in the direction of the slice where it found support at the zone. When price drops to a zone, we expect support. When price rallies up to a zone, we expect resistance until proven otherwise. Just like right here, we had consolidation. We had the resistance we expect. But we consolidated long enough that finally buyers were committed and they pushed us through. That's a slice. And look what happened. When the slice ran out of steam, price retraced to the zone it sliced through and then continued in the direction of the slice. These are all things that you'll learn and understand. It seems like a lot when you're new, but I promise you, once you're with us a couple weeks, because we're not switching stuff up every other day, okay, like a lot of places. We've been using the same strategy, same methodology, same indicator since 2008. If it's not broke, don't fix it. So you might hear a few buzzwords you never heard before, words that we created to explain what we're trying to convey. And after a couple weeks, you know what the BBC is. You understand the purpose of the step line and red and falling and blue and climbing. You understand the importance of the weekly trading zones, which are published every Monday morning, 6:15 a.m. Eastern, since December 14th of 2009. Here's a beautiful example of the zone is actually 2233/34. So we touched the zone and got rejected. Touched the zone again and got rejected. But the CTA trigger itself, 2240, took us down to a swing low of 33.8, so we'll call it 34. That's 6 points at $50 a point, $300 per contract traded. Then price got back above the trigger and triggered again. And this time it spiked through the zone. So it's identical to this. 6 points, $50 a point, $300 per contract traded. And then the same thing again. Price got back above. This candle closed here. So we made the run down, and then this candle closed here. So in other words, we triggered, we re-triggered, and this candle had a low of 37.40. Okay? Once an alert triggers, under normal conditions, you should expect it to trigger multiple times. Some days it's twice, some days 3 days, sometimes 4, 5, 6, 7 times. Okay? Just depends upon the current prevailing market conditions. Price right now on the Russell is up against resistance. It has rallied up to a weekly zone and the BBC. Either one of those individually we would expect to be good resistance. So this is resistance times 2. However, it is possible that price could overcome the BBC and make a run to the upside. We've got blue and climbing here, which is bullish. So right now price is trapped between the BBC and blue and climbing. So there is no trade here based on the 30-minute chart. We've got to wait for price to either break down and get below blue and climbing, or we need to see price rally and overcome the BBC. Before I would want to get long, take out this high, take out this high, and then trade this window of opportunity. right here. Roughly 22.48 up to 22.52. 4 points, $50 a point, $200 per contract traded. We talked yesterday about deciding what kind of trader you want to be. When you become a passport holder, which is lifetime membership, okay? Part of your 24/20 blueprint process is determining what kind of trader you want to be. Do you want to be the guy that comes in, gets his goal for the day, and then goes and does life, whatever that is to you? Maybe it's ministry, maybe it's your day job, I don't know. Or you can be the trader who wants to sit in front of the screens all day and try to trade every move the market makes. It's your trading business. You get to make that decision. Part of the process as you work through the 24/20 blueprint is you're going to write a business plan and you're going to write a trading plan. Those are two very different things. 9 out of 10 traders don't have a teacher, and 9 out of 10 traders don't have a business plan or a trading plan. So as a lifetime member, a passport holder, not only do you have a living, breathing instructor in front of you every day for 2 hours, every trading day, putting on, taking off trades, explaining every move he makes, every trade he takes, and the rule behind it, plus answering your questions. It's an interactive environment. It's the best way to learn, okay? Got nothing against books or videos. I've got a couple books we recommend. All of our members get a free copy of Trading in the Zone by my friend Mark Douglas. I also recommend the book by my friend Mike Reed, Read the Greed, Take the Money. And we ourselves have thousands of videos, so I have nothing against books and videos. They can be an important part of your trading toolkit, but there is no substitute for a real live teacher that you can watch trade, follow along in your simulator until you qualify to go live, and ask questions while he's putting on and taking off trades. So back to the chart. Okay. We've already discussed what happened here. 3 short side triggers. Go to the NQ. Now this is one where I couldn't find my short trigger. It should be over here somewhere. But I'm not going to waste time looking for it. I'm just going to do this. Okay. The long CTA last night for the NQ was 16,555. Now watch what I do here. I'm going to highlight this by clicking it. See the little dots on the end? Now I'm going to hit Control C on my keyboard. I'm going to position my mouse up here, and I'm going to hit Control V on my keyboard. What did I just do? I created a duplicate of that. Okay. So now I'm going to pull it down here. I'm going to double click it and open the properties box. I'm going to change it from green to red. Okay. And instead of long, I want it to say short. And then I'm going to close it. And the only thing I failed to do was change the price. And as I showed you earlier and encouraged you to take a screenshot, you can see on the NQ down at the bottom there, the short was at 16,448. So 16,448. That's how easy it is for you to put lines in the sand every night in your own trading. Okay? All right. This is where the market opened. Consolidated at the BBC, more consolidation at the BBC. This is hours. These are 30-minute candles. Finally, we trigger at 16,555. We put in a swing high at 562. That's 7 points at $20 a point. That's $140 per contract traded. Price got back below the trigger, triggered again, put in a high at 64. That's 9 points at $20 a point. It's $180 per contract traded. And we got another trigger here. That's It's 5 points, $20 a point, $100 per contract traded. Then we got back below the trigger, triggered again. This time it gave us 4 points, $20 a point, $80 per contract traded. And this one here basically just got rejected. But it ran up, yeah. It's less than 40 bucks per contract. So they're all very small moves, but we had 1, 2, 3, 4, 5, 6 valid triggers. Once blue and climbing turns to red and falling, now you're not looking to go long anymore because the market's heading lower. Now watch what happened here. Price came down to the zone. When the market finds support, that's what we expect when price drops to a zone. Look over here. Price dropped to the zone and bounced, dropped to the zone and bounced, dropped and bounced, dropped. We expect it to be support until proven otherwise. Now, today's Wednesday. These zones were given to our members Monday morning at 6:15 a.m. Eastern. Don't you find it at least a little bit interesting that numbers given out Monday morning at 6:15 a.m. Eastern are doing this on a Tuesday and doing this on a Wednesday? Okay, so when the market finds support, it's going to turn around and go look for resistance, which it found at the BBC. It's what we expect. It's part of our methodology and strategy. That resistance sent us down through the zone. We triggered the CTA at 448, and we put in a low at 388. So let me use my calculator. 448 minus 387. That's 61 points at $20 a point. It's $1,220 per contract traded. Now remember, the trade to target is the weekly zone. The zone is 380/381. So it didn't quite get there, but that's the published entry. That's the published final trade to target. Now something else happened here. On this first touch, we got rejected, but this time we sliced through it. When the slice ran out of steam, look what happened. Price retraced right back to the zone that it sliced through. And what did it do? It continued in the direction of the slice. Now it's gotten back above the CTA, so we may get another trigger. We had one trigger, and then we had a second trigger that took us down. Actually, this candle continued down, This was a red candle before it became a green candle. And so the low of that wick is at 415. So 448 minus 415 is 33 points at $20 a point, $660 per contract traded. So you had a nice $1,200 per contract trade, a nice $600 per contract trade. Based on our methodology and strategy, as price rallies up, it will either find resistance at the zone or the BBC. And if it takes a little while, what will happen is the BBC will drop and potentially price and the BBC could meet up right at the weekly zone. That would be resistance times 2. And that would hand us another leg to the downside and potentially another trigger of the CTA. Okay, so we've covered the S&P, the Dow, the Russell, the NQ. S&P at resistance. The Dow, it made it so far halfway through that window of opportunity. Now remember, when you're looking at a 30-minute chart, a bigger picture time frame trade, in the live training room, we use aggressive risk management. When Michael has 4 ticks profit in a trade, he moves his stop to break even. If you do that on the larger time frames, you're just going to get stopped out again and again and again. Okay? Because important prices, important areas are almost always tested. Now what happened here, okay, this became an important price, important area because we took out that swing high. These are important prices, important areas up here. So price made a run about 3/4 of the way through the window of opportunity. It then came back to the bottom of the window or the trigger. And now the high probability thing is we've got, what do we got? 12 minutes left in the life of this candle. Most likely we'll see another run that takes us all the way to the top of the window. Now, if we can overcome this resistance and this resistance, we could get a long trigger. Although, again, the markets are very quiet and sideways. Welcome to holiday trade. So S&P Dow we covered, Russell we covered, NQ we covered, crude oil. All right, the CTA on the short side for crude, 75.30. And so we had no trigger on the short side. On the long side, 76.30 was the trigger. And this first trigger made it up to 76.37. That's $70 per contract traded. This trigger got us up to $50 per contract traded. And then this one took us right to the trade to target, 77 bucks. That's a $700 per contract move. And then price gets back below the trigger, triggers again. And so far on this move, we made it up to 76.50. That's the swing high. From the published entry to the swing high, $200 per contract traded. But this was the jam right here. Okay, 2 markets left. Gold. Now, make sure those numbers are right. 1816 and 1803. Yes, they are. And here's where the market opened last night, right at the weekly zone, consolidated, It could not push through the BBC. It held as resistance. This blue and climbing turned into red and falling, and so it took us right down to the CTA at 1803. First trigger dropped to 1802.1. So that's $90 per contract traded. And we got back above the trigger, triggered again. Now the trade to target was only 1801, $200 per contract traded. But our experienced traders very well may have stayed with this trade because we sliced. We did not retrace all the way back. We continued down to the next zone at 1791/92, where the market found good support, which sent us back up to this zone for a consolidation. And now we're almost back up to this zone. Now remember, these numbers were published for our members Monday morning, 6:15 a.m. Eastern. Over here, as the market rallied yesterday, look at where it found resistance at the weekly zone. As it dropped, where did it find support? At the weekly zone. Support at the zone. If we rally up to 1807, I anticipate that to be good resistance until proven otherwise. You see, these are the kinds of things that don't change every other day. So many traders make the mistake of, every time they step up to the plate, they change their swing. Well, I tried this yesterday and it didn't work. Let me try this today. Well, I've heard good things about this thing. No. You got to stop, okay? Whether you learn from us or somebody else, okay, find something. Find a home. Find a family of traders, because trading's a lonely business. You can't go next door across the street and talk to your neighbor about your trading business, because his eyes will just glass over because he has no clue what you're talking about. It's like when my son comes to talk to me about his video games. I do my darndest to appear interested and ask intelligent questions, but I understand so little of what he's talking about or the importance of it. So being a part of a trading group, a trading family, that's important, and we offer that. And when you go into our discussion groups, whether it's the alert trial discussion group or the members only discussion group, you'll meet some of the nicest people in the world. And they're happy because they have found a home and they are learning how to trade and they are learning how to be profitable. It's not another dead-end street. It's not another blind alley. It's not another somebody just trying to pick their pockets. Okay? This is real. We first broke the airwaves in 2005. Michael and I launched the training room in 2008. And I basically dedicated my life to this, to helping you learn how to trade since the inception. I had no idea my life would head in this direction. I had spent most of my adult life running call centers. Okay. And then I started investing a little. Then I heard about this thing called day trading, where everybody was, this was in the dot-com bomb. I wasn't a part of that, but I was hearing all these horror stories about people losing their homes and other terrible things. And it's like, well, it's kind of like when you see a sign that says wet paint, what's the first thing you do? Come on, tell the truth. You touch the wall. You want to see if it really is wet. So once the bubble burst in the dot-com, just as on the run up, all you had to do was buy something and you made money. Well, when that baby crashed, all you had to do was sell and you made money. And then we had the rally up into the real estate crash, the mortgage-backed security crash, the Great Recession as they call it. Okay? So, anyway, been at it a while. Michael and I, in the beginning, when we first met, I know I told you this yesterday, we owned every indicator and oscillator in the world, and when we couldn't buy anything else because we bought it all, we started to roll our own. And eventually we realized that we were headed in the wrong direction. More stuff wasn't the answer. We had to get down to the very basic underlying principle upon which markets operate and build from there. And that's exactly what we've done. And we got a room full of happy campers that you're welcome to drop into anytime. You take the trial, Valerie hooks you up with a link to the trial discussion group, and you'll be in that room with other people taking the trial. But our members, they drop in all the time to answer questions, show charts, help the new guy. That's the sense of community that we have here. There's no backbiting, no backstabbing, no gossip, no envy. No, we're on the same team. Our goal as a whole is to build God's kingdom. Some of us were called to build orphanages. Others are called to do different things. Feed the hungry, clothe the naked, house the homeless. Okay? God created you for a purpose. But ministry costs money. Maybe you want to be a missionary, but you can't because you can't afford a plane ticket. Now, what have most missionaries done throughout history? They go stand before a businessman who may be even a non-believer with their hat in their hand as they shuffle their feet and ask for a handout. When the king sends you on a mission, should you really have to beg from strangers to fulfill the king's mission? I don't think so. I think Christianity got that wrong for a lot of years. Okay? We have an opportunity today with technology. I mean, people are going to look back on this time period that you and I are living through right now, even though there's pandemics and politics and all this stuff going on. This is going to be a golden age, kind of like the roaring 20s. There will be great Gatsbys. There will be Hearsts and Rockefellers that come out of this. If you can learn to be a consistently profitable trader, if you can learn to consistently take a couple points a day out of the S&P 500 Emini futures and patiently build your account size, the 2420 blueprint teaches you how to do that. You trade in sim until you prove you understand the strategy by putting together 10 consecutive days in a row where you reach your goal. Then the blueprint gives you the green light to go live with one contract. Just one. Now your goal is to increase your account balance by $2,000. Once you've accomplished that, the blueprint will give you the green light to add a second contract. Now, 2 points in the S&P is worth $100. 10 ticks in crude, 10 ticks in gold, $100 with one contract. Now the second contract, that first contract, that's got to be funded with your startup capital. But the second contract is funded with profit you earned in the market. And the third and the fourth and the fifth and the 10th. You only add one contract at a time when the blueprint tells you it's time, and you only add with profit you earned in the market. By the time a year goes by, you very well may have earned the right to trade 10 contracts. If that's the case, then those same 2 points that used to make you $100 a day now make you $1,000 a day. And with roughly 250 trading days in the year, that's $250,000. That actually puts you in the top 3% of wage earners worldwide. Now, let's face it, if this thing were easy, everybody would do it. It's not easy. Trading is not easy. But it can be simple. How can it be simple? By having a teacher. If you're trying to learn how to trade, you're going to end up in this group or this group. This group doesn't have a chance because they don't have a teacher. Having a teacher doesn't guarantee you'll be in this group, but it means you at least have a fair shot at being the 1 out of 10 who does succeed. Because you have someone to teach you. 2 hours a day, every trading day, plus unlimited one-on-one mentoring. We needed help. If you can't learn it, you come to class. And some of you have day jobs, and so you can't come to class every day. And so you have to rely more on the one-on-one mentoring sessions and watching video recordings of the training sessions. Okay? So you're going to have to work. Okay? Again, if it was easy, everybody would do it. Just because you decide to become a trader, money's not going to start falling out of the sky. If you're brand new to the world of trading, it's going to be simpler for you than the guy who's been at it for 10 years and has already lost a couple $100,000 because they're emotionally, psychologically, and financially broken. We try to catch you before you do too much psychological damage to yourself. Losing money in the market, okay, it's no fun, right? But you can always make more money and take another run at it. Time is the most precious commodity we have because no man has yet figured out how to create more time. So if you want to shave years off the learning curve and tens of thousands of dollars on things that just don't teach you how to trade, you should get a passport. And you can get one here at eminifuturestrading.com. If you have questions, call Valerie, 949-42-EMINI. You can email her, support@cfrn.net. She'll answer any questions, fill you in all the details. Now, we're approaching the end of the year. I am not an accountant. I cannot give you tax advice. But if you're considering trading for a living, if you purchase your passport before midnight, December 31st, ask your CPA. It's possible that in your personal situation, it could be a tax-deductible write-off. Okay? But again, everyone's tax situation is different. Ask before you leap. Now, if your CPA says, "Nah, I don't think you can write it off because of blah blah blah," okay, fine. That doesn't mean you shouldn't get a passport. I'm just saying if you want a passport, if you think you want to trade for a living, if you really want to, if you're willing to work at it, okay, and you're planning to buy a passport at some point, then talk to your CPA. There's a couple days left in the year. And that would allow you, when you file your taxes April 15th next year, to claim the deduction. Cost of the passport, lifetime, no recurring fees, not weekly, not monthly, no upsells, no nothing. It's $5,000. To be exact, it's $49.97. Okay? Again, if you have questions, call Valerie, 949-42-EMINI. Emini. Okay, we've only got one market left to cover, and that would be silver. So let's go to the silver chart. Now, when the price of silver moves $1, if you are holding an ounce of silver, you make or lose $1. If you're trading one futures contract and the price of silver moves $1, that's worth $5,000. When the price of silver goes from $22 to $23, a $1 move, 100 pennies, is worth $5,000. Now, the long side on silver last night, the long CTA was 23.24. Okay, never triggered. Price market opened, price came down, found support at the zone. It spiked the zone, and it looked like it wanted to just keep going, but it abruptly stopped for some reason. Why would it? I mean, it looks so leg, retrace. Why did it stop there? You see this bearish cross? There's your answer. A bearish cross that leads to an extended move. When price revisits that area, it will almost always act as resistance, at least the first time up. Same is true of a bullish cross. Okay. This bullish cross here didn't lead to much of an extended move. It ran into trouble right here. It didn't really have a chance to get cooking. And so as price came back down, that bullish cross was right below the weekly zone, and there was so much downward momentum. I mean, we just went from zone to zone to zone to zone. The lowest weekly trading zone this week is down at 22.26. We almost made it to 22.57. Now on this particular alert, okay, we only had one trigger, but it triggered at 22.96, and it went to 22. The zone is 85.86, so that's a 10-cent move. Okay, if 100 pennies or $1 is worth $5,000, 10 pennies is worth $500 per contract traded. But you got to be careful with silver. It's volatile. Margins are really high because of the volatility. And so just be careful. What's happening right now? Price is consolidating at a weekly zone, just like it did here. Got rejected here. Consolidated here. You see, it's the same thing over and over again. With us, you're not having to learn some new thing every other day, because we're just stuck in our ways. If it's not broke, leave it alone. If this holds as resistance and price comes down, this low is potential support. Blue and climbing is potential support. So I would not consider being short this market until price got down into this area here, because you got some obstacles that have to be overcome. Now, if price gets above the VBC, there could be a long trade. Actually, you got those highs right there. Mm, 22.92 up to 22.95. 3 pennies. 100 pennies is $5,000. 10 pennies is 500 bucks. Okay. Oh, the one market we didn't cover, because I haven't gotten accustomed to this market yet. I just started doing it. Here's where the market opened last night. This is the 6E, the euro. And I'm still trying to figure it out. But this is the first week I published weekly zones for the euro. But the principle is the same. Remember, everything we do, everything we teach, all of our tools, fluid across all markets, all time frames. When price came down to the weekly trading zone, what happened? It found support. Support sent it looking for resistance, which it found at the BBC. It's what we expect. We then spent hours consolidating at the weekly zone, and then the market dropped to the weekly zone below, to the tick. When the market finds support, it's going to go look for resistance. We consolidated for an hour and a half at the zone, and then we climbed from zone. Right here we had consolidation, then to the next zone, and then to this zone, to the tick. Price then pulled back to the zone, got below blue and climbing. We're below the step line. From here, the high probability move is down to the BBC, which, when approached from above, we expect to be good support until proven otherwise. And then another leg to the upside. That brings us all the way back around to our daily chart. And just remember that doji, that daily doji put in on December the 28th, that could be the new all-time historic high for a while. Okay? We got the 24, the 38% Fib retracement, the daily BBC. Okay? All right. Let's go to our good word for the day and get out of here. Sure you got places to be and things to do. Okay. Genesis 3:9. God called to the man, Adam, where are you? This was not a geographical question. He's God. He knew where Adam was, hiding behind that fig leaf, right? This was a much deeper question that God was asking. Genesis 3:9, the New Living Translation. God called to the man, where are you? When you don't feel good about yourself, you use things like work, food, relationships, money, and mood-altering substances to build a wall and keep people from getting too close. But lasting relationships can only be built when you stop hiding and become transparent with others. You should be transparent in your personal life, in your relationships, and in your business dealings. Now, I understand there's trade secrets and whatnot. Nobody's asking you to be transparent about those. But you get the idea. I'll never forget in 1996, when my wife and I, we had both been raised in Christian homes, but then we spent 20 years filled with debauchery of every kind. But it was 96 that we returned to the God of Abraham, Isaac, and my grandmother. Started doing the whole church thing and learned about K-Love and popular contemporary Christian music. Anyway, started a company that hired only ex-felons alcoholics and drug addicts in recovery, abused women, all the people, felons, all the people no one else would hire, the people who had fallen through the cracks of society. That's what you needed to have on your resume to come to work at HandyNet. It's a true story. We had the entire basement of a building at 130 North Central, 6,000 square feet. We had over 50 employees at one point. Now, remember, this is all happening so quickly in God's time. Once we stopped our foolishness and surrendered our lives to God, and I remember praying this prayer, and I almost felt like I heard the earth shake. I was completely at the end of myself. And that's usually where man finds the beginning of God, when he reaches the end of himself. I cried out. I mean, I literally cried out. I said, God, I can't do this anymore. Please, take my life and use it for good, or just take my life. I was at the end of my rope, and it was really starting to look like a noose. The ground didn't shake. I didn't hear the voice of Charlton Heston. But I had a heart change. I surrendered. The universal sign of surrender is when a man lifts both hands in the air. If you ever wonder, that's why we praise God that way in church. People lift their hands. So I surrender. And things began to happen at such a rapid pace. God put this idea in my head for a business, and everywhere I went, I had no money. I got an office based on my word. The leasing agent liked me enough, trusted me enough. I told him my story. I was honest with him. I said, I want this office. I'm going to work real hard and try to save up the money. I'll be back in a month and I'll pay. And he goes, no. I want you to start your business today. And a month from now, you can pay me. What? And then I found out there was a telecommunications firm on the 3rd floor. I went up and I talked to the owner of that company. The next day I had phone lines. I had T1 internet service without taking a dime out of my pocket. On the ground floor of that building, there was a printer. I needed invoices. I needed all kinds of pamphlets and brochures. I went down. I talked to him. He gave me a line of credit. I'd blown my credit to smithereens. The hand of God was on her life. And in that basement, Dwayne needed a desk for his office. And so my wife and I think she went on Craigslist or someplace where there's a free section, people giving stuff away. Somebody was giving away a glass, I don't even know if you would call it a desk. It was more like a table. It's like something you might see sitting on an altar in a church. It was a pedestal, glass, and then the tabletop was glass. And as soon as I saw it, I knew that was my new desk. It had no drawers. I'd been hiding things for so long, for so many years. It was symbolic for me to have this as a desk with no place to hide anything, because I was tired of hiding things. I wanted to be completely transparent. And that's what's happening here in this story between God and Adam. When God calls out to the man, "Where are you?" Lasting relationships can only be built when you stop hiding and become transparent with others. Another hiding tactic we employ is keeping the focus on other people by asking, how come she got a new house and I didn't? Or why did he get that job and not me? That kind of thinking only does one thing. It makes you miserable. But even worse than pretending with people is pretending with God. When God asked Adam, "Where are you?" he already knew the answer. He is God after all. So why did he ask the question? Because he wanted Adam to acknowledge where he was and what he had become. Eric Hoffer said this: we lie loudest when we lie to ourselves. Until you face the truth about yourself, you will find it hard to talk to God. You'll feel lonely and alienated. You'll struggle to look people in the eye in case they might just see the real you. It's time to come out of hiding. It's time to get down on your knees and say, Father, I know you love me. Nothing can change that or rob me of its joy except my own doubts and refusal to believe it. Your word says you loved me before I was born. Your word says that you fashioned me according to your plan. You redeemed me and gave me a special purpose in the world. And you're working day by day to make me into a person who is pleasing to you. Read Philippians 2:13 to give you a better understanding of this thing called transparency. The good news is you may not have a glass desk, but you don't have to hide anymore. Your Heavenly Father is looking down the road for you to see if you're coming home. Please come home for the new year. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.